Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about today's bear market rally, the fear of too far too fast for the rate hikes, and how Apple stock has held up during the sell-off. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market futures are in the green this morning after weeks of selling. What's your take on this?
Well, good morning, everyone, and good morning, Allison. And yeah, we finally have some green in the market, which has been rare, right? Or at least we have some green for now. Now we have seen this at other times during the week, where there's or in the past week and a half where it started green and ended up red. So I'm not sure I would start celebrating too early in the day. But so far so good, right? Up almost 1% across the board. We're on a 5-day losing streak for investing. So I mean that's been a pretty significant sell-off. We looked at, when you look at the S&P, which is we'll pull up the 1-year chart here. We looked at this yesterday, said, are we not going to go through new lows? Well, we're kind of at that low and we're kind of bouncing. So that's a good sign of strength. Doesn't mean it'll hold, doesn't, but it's at least a sign of strength. We didn't go blitzing right through the bottom of it, unless today rolls over and continues down. So this is more of a stay tuned kind of day. I wouldn't necessarily rush out to and buy everything under the sun today, because we bounced off the resistance line there, but it is a good sign. But other things are going on in the market. Obviously, the rate hikes are still in the news. You see the breaking news up here. Home prices, obviously, they're headed down. And kind of like your portfolio, folks people are like, well, if the portfolio is dropping, why don't you sell everything? And I'm like, well, you're sitting in a house right now knowing that the housing market's going to sell off, and cost you maybe $100K or so in your house. Are you going to sell your house because of that? Now some will, if you have another option, but most people are like, no, it serves a purpose, right? I live in it. Well, your portfolio serves a purpose too. It's money for the future. So kind of let things ride. However, as we've talked about, there's some of you that I'm raising some cash for. No problem having some cash on hand in case things do go lower from here.
Next, top Fed official Charles Evans is concerned the Fed is raising rates too far too fast. Do you agree with his concern?
Well, he was all over CNBC this morning, and so you can't win, right? It's like whatever you choose is wrong. So you have inflation out there, and the critique so far has been the Fed did not do enough early enough, right? Excuse me, for inflation, right? It's like kind of like we're late. Well, if you're late, if that's the overall narrative, then it would be the right thing for the Fed to continue its aggressive, every 6 weeks raising rates. We're on 3 straight 75 basis point rates. But the downside of that is, sure, his concern about too far too fast is going to throw us, headlong right into a recession. So you can't win, right? If you do it too fast, you're going to cause a recession. If you do it too slow, people complain about the inflation, that we're going to be in this inflationary environment longer. I think this is kind of panning to the market a little bit about, it's spooking investors how far we're going with rate hikes. But if you step back and look at what we're actually trying to do, which is bring the inflation down, then we're probably not doing it fast enough, right? Now, you can argue all day long, and I won't even take the argument this morning on whether the two are correlated and that it's actually going to work. That was kind of yesterday's topic of what if it doesn't work. But if you believe that rate hikes work and will break inflation and will normalize things, and even though if we have a recession, it'll be short-lived, then we would want to actually raise them faster than we've already raised them. So it's kind of like if you do it too slow, you're not tackling the problem. If you do too fast, you're causing another problem. So that's what's got everybody kind of concerned in the markets.
Last, Apple stock has held up better this year than the rest of technology. Is Apple a buy, sell, or hold?
Well, I tell you, that's one nice thing about having Apple stock is your largest single holding. And then, 2 of the top 5 are Blackstone private investments now, which aren't exposed to market forces. So it's kind of nice to have some money that in the top of the book here, not only personally, but as professionally for the clients out there, that is holding up well. Now, what's holding up well? Well, let's find out, right? So that means, that Facebook and Netflix are down 60% this year. When you look at Apple, scroll down here, let's get a better chart. We'll do the 1 year chart since that's been on 1 year lately. Down 15% for the year. And you're like, well, that, if that number was, if you said on January 1st that you'd be down 15% in Apple, you're like, whoa, what? That's terrible. If you're sitting here on September 27th and the whole market's down 20 plus percent, and you're like, oh, Apple's only down 15, it's like, that's pretty good, right? So it is kind of all relative. But as far as, let's look at this, you see the PE ratio, it's got a baby dividend, low PE for a tech firm at 24. Significant earnings. Look at what I'll bring your eyes to at this chart is this snapback here in June, mid-June to mid-August, almost got to new highs, right? I mean, it came raging back. So during the sell-off, you've seen the other chart where the sell-off is pretty steep. So Apple seems to be bucking the trend. And of course, it's not anywhere near its lows down here at the 130 level for the year, like the S&P is. So it is holding up significantly better than the rest of the market. The question was, is it a buy, sell, or hold? Well, it's a clear hold if you have it, right? It's not going anywhere. You have no need to try to go to cash and come back in at a lower price on your Apple shares. No, you simply hold those. Would you buy more here? If you didn't have any and you were anxious to put some money to work, you could buy Apple. I'd fully bless that. But I don't really see any reason to sell. So it's either a hold if you already have it, or if you want to add some more here, you can, but I wouldn't be in a hurry.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.